A dose of adrenaline to the market. Where I feel we're going to bounce to, our game plan and Forex game plan as well. The motivational help in hectic times, very good for psychological toxicity, curing it and pushing forward. And then, of course, our full stock analysis from your end. This is the Newsbeat Show. Hey, good evening, ladies and gentlemen. I am Mark Melnick, and I will be going through the Newsbeat Show here today. And let's just take a look at what's on our agenda for tomorrow. Of course, we have a dose of adrenaline, how to manage, where can we bounce to, the game plan in Forex, and of course, motivational help in our full stock analysis. All right, so let's just take it to the charts. I'm going to say exactly where I feel we're going to go. I mean, I've listened to so many answers over the weekend, and I seriously we're talking to some people, and I basically said, look, tell me where you think the market's going to go from here, but don't give me both sides of the coin. I don't want to hear that. Everybody knows if the market breaks down, we could short it and head lower. And if the market breaks up, we could long it and head higher. That goes true for every single market on every single day on every single second ever traded. It's not really what I consider useful advice. It's bull crap advice. That's what it is. It's the type of advice where somebody wants to come on with absolutely zero conviction. And I told the people that I spoke to, a lot of the uh, big fund managers and whatnot, I'm like, hey, what do you think? And a lot of them told me, that their hedge funds were going to be throwing in pre-market buy orders going into Monday. They were like, look, our firm, we've had our discussions. We listened to your show. We feel we're going higher. So I have to agree with that. So first off, why don't I start and say we're going to have a massive gap up tomorrow morning? Massive. Massive gap up tomorrow morning. Now that we got that out of the way, let's talk about the type of direction we can move in. So I think the key here, considering a lot of supports broke and held above, like you see the triple Qs here holding support, you see the spiders here holding support, you see Apple here. Look, if you're using the Melnick reversal method, you would have come out with a level that Apple could have bounced on. Excuse me, we call it the Algo Buster method nowadays. I apologize for that. Really the same thing though. You would have come up with the number $150.80 as a potential low for Apple. We hit $150.24 and we bounced just astronomically alongside the market. And every single name did indeed bounce. We're dealing with a ton of volatility. So what do you do? To me, it's not it's not that important to me what name you play if you're predicting the market to go up, as long as it's a market moving name. I don't want to hear the garbage like, oh, I took this 20-cent biotech stock, and the market shot up, and I didn't make any money. It went down. Well, that's not what I'm referring to. I'm referring to big market cap names that are listed in the spiders and the Qs, big market moving names that move up higher when the market moves up, names that move lower when the market moves down. So for example, Apple right here is a perfect example of that. The key to success tomorrow, the market trading strategy is going to be very, very simple. So one, I told you guys I'm looking for a long bias. I'm saying we should gap up yet again here. I think that is readily apparent. And I said, look for Friday's highs to break in any name you'd like. Any name you'd like is a very, far stretch of the imagination. If you're trading names that don't follow the market, I am not referring to those names. I'm just referring to the majority of names. Any name with huge market caps that follow the Qs or spiders. So look for Friday's highs in any name that you want to trade to break in any name you'd like. And then the scalp intraday market is still in effect. I do think we're going to climb up in the market towards the exponential 8 moving averages in almost every name. I'll repeat it again. Very simple. Here are the Qs. Here's the exponential 8 moving average at 160.29. It's probably going to drop tomorrow, right? I think we're going to go through that level and bump it. I think it's going to happen on all these names. If you take your daily chart and simply put in an exponential 8, that is sort of the target. I think it goes a little above based on the volatility. I don't think you get stuck at any resistance or support line. I think you have to sort of basically just put in a standard where if you're watching stock XYZ and XYZ is at $50 and your support is at 49.50, generally I'm looking to buy at 49 and a quarter or $49 because the 49.50 is most likely to break. That is just a vague and very simple it's a vague stock considering it's non-existent, but that's basically my strategy for every single name. So you come in tomorrow. How are you going to buy this market? How am I going to buy this market? Rather. So, like for example, Apple's high is 157.89. If Apple wants to start going through 157.89 tomorrow and we're trading beneath it, I'll probably buy Apple. GOOGL, Google. Yes, Friday's high, 1051.72. If we're trading below it, I'll probably go long. Amazon, Friday's high, 1383.50. If we're trading below it, I probably go long it. Now, what do I mean if we're trading below it? Well, I think there's going to be a massive market gap up tomorrow. So with that massive market gap up, two things will happen. We're going to start pushing higher right away. In that case, I'm going to end up chasing. I'm going to end up buying Amazon calls. See, if I'm going to give you both sides of the coin, I think it's very important that you see, how to trade it. So we gap up tomorrow. Maybe I'm wrong, but that's my prediction. We gap up tomorrow. Let's say Amazon is at 13.55 off a gap up. It gaps up like 15, 16 points. I see Friday's highs 1383.50. I think that level's going to break. Do I buy 1383.50? No, I don't buy 1383.50. I try to buy ahead of time in plans for the stock to break 1383.50. Let all the algorithms jump on top of that name, and then maybe I even sell there or wait for it to go a little higher. The same holds, I'm using Amazon as an example. The same holds true for every single name. So tomorrow, when you come in the room and you're like, Mark, I'm thinking of buying whatever name, you come to me like, Mark, I want to buy Intel. I'm going to say, is Intel below 44.28? That's Friday's high. If the answer is yes, you're looking good. If it's above it, I'm thinking no. Oh, you want to buy, what was that? You wanted to buy Cisco? Okay, Friday's high is 39.92. Are we opening up at 9:30 a.m. below 39.92, considering the market's going to, in my opinion, gap up, and all these names should gap up? If the answer is yes, I'll like it. I'll probably go for it. So that really holds true with every single name here. And why am I saying this to you? Because it all goes back to the Qs. It all goes back to the spiders. You want to keep it stupid and simple? The spiders open up below 263.61, or if the Qs open up below 157.24, I'll probably buy it. But let's say the Qs open up above that level. Let's say we open up above 157.24. Then I start scrambling for the names that are not above Friday's high at the moment in the pre-market. So that's going to be quote unquote my trick. I know it's been a massive week for me with all this scalping. I think these market reads are pretty easy. I think it's volatile. I think if you set tight stops, you're screwed. Do not set tight stops in this market. Take less size. The easiest way to do it is through options. You want to not see your P&L swing stupidly. You want to not go down. You want to buy 100 shares, like even 100 shares of Amazon. Like you guys saw what I was doing with Amazon on Friday. Like granted it was more than 100 shares. But like even 100 shares of Amazon will I'll show you an example. Because it's insane. And I'm going to tell you how to not whip around like I did. So for example, on Friday, I started buying Amazon. I think my average price was like $12.89. The stock shoots up to $13.04 and then plummets all the way to $12.65 and then shoots up to $13.43. So think about what just happened here. This is a 5-minute chart of Amazon. So think about what just happened here. Right here was my average price, right? I bought it on this candlestick right here. So I'm going to draw it out. I'm going to make it so easy for you guys to know exactly what to do, not how to get stuck in a stupid trade that's just blowing you out before you just give up on it, only to watch it minutes later, 10, 20 minutes later, and watch that your position would have been a crusher. So here we go. I'm bringing you on Microsoft Paint so I could just draw it out for you, just so you guys can understand. Real simple, stupid, right? So I bought it on this line, so I bought it like right there. That's where I bought. So let's say long, I don't remember what my penny average was, but let's just say, you know what, I'll make it high. Let's say I'm long 1290. All right, we'll make it real simple and stupid. Keep it simple, stupid, kiss. You're long 1290 Amazon. You see, so Amazon then bounces to 1304. The question is, did you sell here? Let's say the answer to that is no, for whatever reason. Not saying it would have been a bad sell there, it would have been good, but let's say the answer is no. You then watch Amazon plummet all the way down here. You watch Amazon plummet all the way down here, and this number down here is, let's just round it off, it's 1265, okay? So pretty much, if you bought Amazon at 1290, which is near the lower end of the range, let's say you had an average price of 1290 on Amazon, you took 100 shares, you're down $2,500. Had you held, and that's in the worst case scenario, right? We're talking worst case and best case scenario. Worst case, you held it and you're down $2,500 because that's where it bottomed, right? However, the best case scenario is it jumped up to like around 1345 and you made $5,500. And here would have been one of your, and if you held it overnight, you even have a better case scenario because the market's probably going to do exactly what I'm telling you and gap up tomorrow. So let's we're estimating here. I'm not taking the pennies into consideration. So let's say that's $1,345. So the difference is this. You're not going to be able to determine where to stop yourself out. So many traders are so hot on stopping yourselves out. I guarantee you there's going to be a bunch of traders out there who are going to be listening to me right now and saying, Mark is telling me to not put in a stop loss. Is this guy crazy? What kind of idiot is this? No, that's not what I'm telling you. What I'm telling you is that if you go ahead and you approach a trade like this with options, you'll never get stopped out. So let's say at 1290 you bought a $1,300 call, which was around what? $5, $6? Let's call it $5 at the time. And let's say you bought one of them. Your maximum risk was $500. When Amazon plummeted to $12.65, that call was probably worth 50 cents. Let's say it was worth zero. It was worth more, obviously. Well, but let's say worst case scenario, you're losing $500. Trade the option. And you know what? When you throw that in, you know even if Amazon files bankruptcy and goes to zero, you're going to lose $500. You want to talk the worst magical situation that's likely to never happen? That's what it is. If Amazon shot up to $1,345, your $500 bet would be worth minimally $4,500. Minimally. Doesn't that sound a lot nicer? Doesn't that sound a lot nicer? So when you bought that $1,300 call when Amazon was 12, and it doesn't matter. Don't get hung up on what I'm saying. I don't care if you bought the 1305 call, the 1310 call, the 1295 call, the 1290 call. The point is you had a measured risk reward. So if you bought that $1,300 call at $5, let's say, after Amazon plummeted 25 points from your entry, and I'm using this as an example because this is where we were buying, ladies and gentlemen. I'm not just picking out some stupid level. I'm not some leprechaun coming with some hocus pocus and some pot of gold and talking about hypothetical and theoretical situations. This is a situation we're in, and this is me going back and analyzing the trade. So when you look at this, if you actually bought that option call when Amazon was at $12.90, you would have been down down at worst, and it would have been less than this, but $500 in my example. And at best, you would have been up $4,500. So if and when the market does plummet again, and we do this, consider having options. It makes life not swing in your face as hard. They're time for stocks. Stocks are, you could trade equity in this market. And to be honest, that's pretty much what I've done. But I sat there and I analyzed myself and I said, you know what? I watched my P&L drop to, negative like 12,000 on Friday to go up all the way up to 20,000 before I closed out. And I actually felt like I wanted to vomit. I was like, oh God, I feel like there's like my heart rate was fine. I wasn't like nervous. I wasn't in like tilt mode. I was cool. I was calm. I was collective. I was like, oh God, I like almost not really nauseated, not really like heartburn, but almost as you could like feel acid building up in your chest. It wasn't really burning, but like you felt like something was like in there. And I was like, ugh, you know what? That was not a good feeling. So I wanted to come back and I wanted to really do what I thought was best in that scenario. So again, very simply, my strategy for tomorrow, if you're trading below yesterday's high, you can easily, in my opinion, for myself, and I'm only talking to myself, I can't give you stock picks or investment advice, of course, I'm looking to buy. So moving on along, we, of course, talk where can we bounce to, and again, the exponential 8. So I think the market's going higher. Do I think the market's going to drop again? Do I think this is the long-term bottom? Maybe, maybe not. I don't care. How about let me say it better. I don't care. What I like about the market is simply this volume. This is all I care about. So you could go to freestockcharts.com. You put in free exponential 8 moving average. Every single one of your charts out there have it as well. I think the Qs and spiders are going to go up to that line. So I think we could play anything intraday, and when we get above that line and we hit that line, I might go short again. So this is how I'm handling the volatility. It's been an absolute tremendous week for me. I made a little less than $100,000. So with that being said, and that goes since this drop actually from last Thursday, so about a week and a half. With that being said, just keep taking it cool, We're going to go ahead. We're going to share our game plan in Forex for you guys. Very simple, stupid game plan. I'm talking about VIRT again. Truth is, I didn't play it on Friday. I know I gave this one to you guys on Thursday and said, watch to see if it could break out through 2675. And if you were actually watching it, here was VIRT. It actually worked. I'm mentioning it again. The truth is I don't like much. My conviction on this from a 1 to 10, 10 being, oh my God, I gotta have it. 1 being, whatever, I'm at a 1. So that's my thoughts on VIRT. Just giving that as my very simple game plan again. And of course, if you guys, we're back to Forex. I took a break because the markets were very whippy. I got stopped out on like 3-4 trades in a row. And I was like, you know what? Because of the market drop, I said, you know what? I'm just going to chill for like 2-3 days, let it do its thing, and then put in orders again. And of course, I'm putting in orders again. Here is my orders from my professional account. Let me just do it so it's easy for you guys to see. Very simple. I give you the type of Forex order I'm doing, buy or sell. These are for buys. I give you my size, that's standard lots. I give you the symbol, Aussie Canadian dollar, Aussie US dollar, Euro US dollars, big currencies, right? Great Britain pound US dollars. Here's the price in which I'm bidding at. Here's, whoops, don't copy it yet so I could get the take profit in. Yeah, here's the stop loss for all the names. Here's the take profit for all the names. I go ahead and I share it with you. These are my live orders right now. If you wish, you get to copy them. And of course, they're used for educational purposes only from a legal standpoint. So with that being said, You could go ahead and hit print screen now if you're a member of the room. Don't, because it should be in your email box. If it's not in your email box and you did sign up for the room, email me at mark.melnick@t3live.com. You could go ahead and see it on the bottom left right there, under my senior trading strategist tag. You could go ahead and message me there. Now, this is very important. Motivational help in hectic times. I need this just as much as anyone else. This is not about whether you lost or made money, or made or lost money. This has nothing to do with that whatsoever. This is me trying to lift you up, because this is very important to fight psychological toxicity. So many traders underestimate this. That's why so many traders can never bounce back from hard times. So with that being said, I want to share some thoughts with you. So the motivational help in hectic times, you learn more from failure than success. Don't let it stop you. Failure builds character. And this is something that I keep trying to explain to everybody. You could probably measure that in all aspects of your life. Like I was a Street Fighter 2 Championship Edition world champion. I was the number one player on the planet. I played in the Capcom Grand Finals in California, and I destroyed my opponent with 2 perfect rounds with the character Ryu. Now, that's a silly video game, right? You can only be as good. You can only become a better trader through losing. So that's why when you guys, some of you were surprised when I said, I'm talking to people, I'm like, how many people have blown up an account here? And the majority of you have, some of you haven't. And the people who have, though, you are at a distinct advantage, because you know what dead bottom, drop down all the way to the floor feels like. And that's actually, believe it or not, an extremely positive experience when it comes to being a trader. You learn more from failure than from success. When I played Street Fighter 2, do you think I'm going to become a better player? And I'll use other analogies in my life after this. Do you think I'm going to become a better player playing some person who's brand new to the video game and just smack their butt around, for a couple rounds? Is that going to make me a better player? Of course it isn't. Think about, an NBA team. Think about like the Golden State Warriors. Imagine they're playing a high school team. Do you think any of them are going to get better? Do you think any of them are going to need to elevate their game, get to that point where they're better, if they just keep winning and winning and winning? Of course not. For me, the best part of playing any game is losing. For me, when I lose as a trader, I know I'm going to learn something. So for me, it's always a positive experience, because you always learn more from your failure than from success. Don't let it stop you in this market, because failure builds character and success that is necessary for your future in trading. Do not get discouraged. I'll tell you a better story. I started trading back in 99. My best was I had 99 consecutive straight up days in a row. When I knew I was approaching 100, I had my first down day. I had 99 days in a row, because making money was so stupid, so easy, so brainless. You literally imagine this. Imagine a stock at $50 with a bid of $50 and an offer of $51. Imagine that. $1 spread between the bid and offer. Now imagine you look at your print box and it's printing $50 and $51 and $50 and $51 within seconds of each other. So you would literally throw in a bid at 50, get filled, throw in an offer at 51, get filled, throw in a bid at 50, get filled, throw in an offer at 51, get filled. I did that for a year with 500 share positions. I would just sit there on the bid, get filled, on the offer, get filled. Like, I didn't even care about the direction of the stock. It meant nothing to me. And I made over $1 million doing that. My first year of trading, just 500 shares, in and out, hyper scalping. Trade 300,000 shares a day, 200,000, 500,000, 400,000, didn't matter, because I was just scalping. Oh, what happens if the stock goes down? All right, I buy 50 and the offer drops to $50.50 and the bid is at 49.5, and a lot of times I would sell $50.50. Like it was so hard if you use that strategy to make a losing trade in certain symbols back in the day, that making money, you just thought as a trader back then. I remember I was a 19 and I just thought I was just going to make money forever doing that. Just don't need to know anything, don't need to elevate my game, don't need to learn more about the market. I already had it solved. I already solved the riddle. I already had it solved. I already knew what I was going to do for the rest of my life. And of course, black boxes and algorithms and all these things came in, and all of a sudden the market changed. That's why trading is an evolving game in which you constantly need to learn from. So remember that you're always going to learn more from your failure than from your successes. Keep admiring your failures, admire the down day you had, fix it, know what you did wrong, know what you could do right, and press forward, because that is going to be paramount to your success, your future success as a trader. And of course, last but not least, we're going to go into our full stock analysis where I break down my thoughts and my levels on every single name that you guys can potentially throw at me. I break it down. I show exactly where I would personally buy things, I would personally sell things, and you can mention, of course, any symbol you want. Of course, that is only for members only, and we're going to go ahead and get that right now. We're the fastest growing trading room in the nation. I hope you guys enjoyed the Newsbeat Show. Happy trading, make money. We'll see you guys tomorrow morning on the Newsbeat Live trading broadcast. Have a wonderful evening.